Now, guys, I'm here with Chase, Eve, and Parker from Apex. Thanks so much, guys, for hopping in. We got a lot to talk about. Obviously, the news this week with strategy and selling some more Bitcoin, buying back STRC. Strive continues its chug up the leaderboard here, buying a little more Bitcoin. I want to take a retrospective look at Bitcoin Treasuries a year in, and then some bigger news as well with 21. They put out a shareholder letter. They published their Q2 results today, and not much movement there. It's still a lot of wait and see with 21. We just announced that Rafa, their CEO, is going to be speaking at the Bitcoin Treasuries conference here at the end of September. So really excited to see him in his first public appearance, talking about what's next for 21. But I guess, Chase, we missed you on the show last week. How have you been? What have you been up to? And what do you think of Saylor's moves this week?
Yeah, well, I just that's news to me that Rafa will be at the event, so I look forward to seeing him in person there too, as a fellow Brazilian Bitcoiner, or an adopted Brazilian Bitcoiner as I am. Yeah, sorry to have missed you guys last week. It looked like you guys had a fun uh, strategy earnings call to dig into, but obviously every week there's news from the team, and it looks like this week it's more USD reserve, which I've been calling for the last few months here, and STRC buybacks, which I still don't have a strong opinion on either way, but it is accretive to Bitcoin per share if you're looking at the senior claims and the residual Bitcoin exposure to the common equity, which is obviously way more nuanced than much of the conversation on X, but that's what we're trying to bring here.
Yeah, Eve, and Parker, we both chatted about this yesterday on the opening bell show. But given another day to think about it, are you guys sitting pretty much in the same place? Are we going to see the buybacks continue persistently until strategy gets this thing back to par? STRC was up again on the news, and just tracking the price here today, it looks like there's a bit of a pullback. Just trying to get a fresh quote here. But I'm seeing it's trading above $95 again. We got $5 to go. Is another 100 million, $200 million gonna seal the deal and bring this thing back to par sustainably?
Yeah, I mean that and time. I think the spoils of war, when Stretch is working are just so great that spending a couple 100 million to get it back to par and then kind of defending it there for a month or two. If that can bring in, 1 billion a month or even more, it was bringing kind of earlier this year. This is a small price to pay to kind of make that work. It's certainly a gamble because, they might have to spend like 1 billion or two to get it back. And then you're like, okay, am I actually going to make that back? But I think what we've shown, or what they've shown, is that, even a little bit of buying pressure can really move the needle here. And so, confidence will arrive in spades as it just sits at 100 over time. And so they just have to keep it there, and money will flow back to them, I think.
Yeah,
What?
maybe. Yeah,
Go ahead.
just maybe to add one thing that we didn't discuss yesterday, and I had an interesting discussion with Quentin on the one chair about that, with the USD reserve that they keep increasing right now. And one of the speculations now is that they want to net it out with the convertible debt, right? To have a sort of narrative to say, hey, look, we have a sort of clean balance sheet, right? Because if you start thinking on that terms, then they're kind of getting into the balance sheet that Strive has, and that Michael Saylor already has pointed out to a couple of times. And they're not too far, because they're basically 2 billion away. And at the rate that they're increasing the USD reserve, that's more roughly 4 weeks away from that. And having this narrative or this story to tell, hey, look, we have a balance sheet that is clean in a way, is a very strong story to tell to the investors. So maybe that's one thing that we didn't touch on, and I'd be curious to hear from Parker, Chase, and you, Tyler, what you think about that.
One thing that this week's news kind of reminds me of is something that Richard Byworth said, which is that every Bitcoin Treasury company kind of has this conundrum. They can either focus on optimizing for Bitcoin per share accretion, or they can do whatever it takes to get enough Bitcoin on the balance sheet to be able to issue preferreds, which is the more efficient model long term. And so it's very clear that Strategy has, chosen their path. They'll do whatever it takes. They don't really care on a week-to-week basis how accretive the move is to Bitcoin per share. They're thinking about long-term Bitcoin per share, and the way to do that is through the more efficient means of the preferred stock issuance. And so Strategy has clearly chosen their lane. I think it's up to a lot of the smaller Bitcoin Treasury companies outside of kind of the Strategy, Strive, and MetaPlanet to once and for all decide, because I feel like there's been a little bit of both sides of the fence where they're signaling to investors, hey, look, we're increasing Bitcoin per share, which is easier to do when you're small and you have this smaller base of collateral. But they also, are going to run out of room with that strategy, and they can't really differentiate against the bigger players. So, are we going to see more of these Bitcoin Treasury companies pivot to saying, hey, investors, hang on for the next year or two. We're just going to add Bitcoin to the balance sheet any way we can so that we have enough capital to issue digital credit, which is the more accretive to Bitcoin per share method over the long term. And I think that's the conversation that the Bitcoin Treasury space is probably starting to have over the next 6 months.
Yeah. Does that play out differently? Like if Bitcoin has a run up to, 80, 90K again in the next few months, Chase, versus if we're still bouncing around upper 50s, upper 60,000, do you think a run up in Bitcoin's price just buys more time for these smaller treasury companies to decide what to do?
It's like sales cures all. Like you can have a startup and people in the company can hate each other. You can have bugs left and right, but if you're selling and customers are opening up their wallets to pay, all those problems become insignificant. It's when you don't have sales that, those problems start to really drive the business. And I think that it's kind of a similar anecdote here with Bitcoin Treasury companies. If you're not issuing digital credit, you don't already have that fortress balance sheet of Bitcoin collateral and a USD reserve. You are basically waiting for the sales to come, which in the case of a Bitcoin Treasury company is just Bitcoin price number go up. So yeah, I think a lot of these companies are sitting around saying, do we flail and signal to the market that we're going to do digital credit and issue a preferred now in a bear market when it could fall flat on its face and we could be walking around with the black eye from that unsuccessful launch of this new product over the next 12 months? Or do we maybe wait until we're getting bullish again and then issue that preferred? I actually think that's why we haven't seen the launch of these preferreds. Is the same reason that you see OpenAI pull out of their IPO is there's only so much capital to fund these new products. You want to signal success, and any new product launch, especially something like an IPO type launch, if it doesn't raise an expected amount of capital, it really is a black eye that you carry with you forever.
Yeah, and I think, Bitcoin historically has been this canary in the coal mine for, global macro at large, or increasingly is becoming that for global macro at large. But it's also the canary in the coal mine for just the space, the crypto space at large. And so once Bitcoin starts moving, it's 75, it's 80, it breaks above 80, and makes I guess a higher high, then I think what you see is people start to pile back into the space and they're like, oh, I've missed the Bitcoin run. I don't want to buy Bitcoin at 90, or at 100. What else can I go buy? And so that's why you see people go chase, shit coins and different projects. But then they also look into like the emerging Bitcoin altcoin market, which is the DATs, which is prefs, which is these like Bitcoin derivatives effectively. And so that's, I think, the moment where, the smart money just buys the Bitcoin and then it rips, and they bought in at a good price in the 60s and the 50s. And then the kind of follow on money looks for the next thing that they can buy cheap and like kind of catch up, so to speak. And so I think that's when a bunch of wallets open up and are willing to take bets on pref IPOs at 80 because they're going to go straight to 100 and you're going to book a 25% gain, or new DATs because these things might double or triple overnight, what have you. So I do think Bitcoin moving kind of like shakes things loose and gets the wallets open, and makes a whole lot of things work that just kind of don't work in this environment.
Yeah, no, I think you're right. That makes a lot of sense. Speaking of getting this whole thing moving, obviously, when Bitcoin's going and everything's working, how do you guys, we talked at the top about on the pre-show about this new shareholder letter that 21's new CEO, Raphael Zagury, who's stepping in. He also heads Electron Mining. What do you guys think about, running a Bitcoin balance sheet like 21 is doing? They've got 43,000 plus Bitcoin on the balance sheet, already a massive stack, but they're really distancing themselves from, the leveraged Bitcoin balance sheet. So obviously, seeing all these treasury companies trade as kind of leveraged Bitcoin, and we're seeing them, trade down now with, incredible, price losses, amplified Bitcoin to the downside. How do you think I guess like let's assume that everything goes right for 21. They're able to generate, operating businesses around Bitcoin that are generating positive cash flow every quarter. I guess what type of scale does a company like that need in terms of revenue, in terms of earnings? If they've got a balance sheet that is billions of dollars in Bitcoin, because in order to trade separately from that Bitcoin stack and to trade, I guess, at a premium to that stack, I think the operating business, as we've learned, has to be pretty meaningful because, right now, Strategy's operating business, Strive's operating business, they're so small compared to the Bitcoin balance sheet. And then on the flip side, you've got SpaceX, which just is a huge company with massive, revenues, well, and projected revenues. But their Bitcoin balance sheet doesn't really play into the valuation of the company. So, 21's trying to thread this needle into being an operating company. Several companies have said they've wanted to do the same thing, but we haven't seen anyone, I guess, meaningfully pull it off. So, yeah, what type of scale would it take for a company to, actually be investable and trade in a way that doesn't have as much, I guess, beta to the Bitcoin balance sheet?
A lot. I mean, it's if you look at Berkshire Hathaway, they're not operating all the businesses that they're involved in. So I understand that shareholder letter kind of draws that comparison, and hey, why not? If I was the CEO of a public company, I'd want to draw comparisons to one of the best performing corporate structures of all time. But, Warren Buffett wasn't out there running Coca-Cola and See's Candy. Like, there is a different lift when you're a minority stake shareholder versus actually operating these businesses. And we are seeing free cash flow rewarded with good multiples in public markets today. Arguably rewarded better than Bitcoin on the balance sheet is in terms of multiples, right? Like, Strategy barely trades above a 1M NAV, so not really being priced on the forward-looking value of its Bitcoin holdings, whereas a lot of operating companies, even if they're not profitable, trade at multiples to their revenue often. So there might be something there where like they're speaking the equity analyst language more than Strategy is, and that there could be something there, but it just feels like Strategy's model and Strive's model is this infinitely scalable model where they're basically just taking in capital through the public markets and hitting a buy or a sell button in their dashboard, whereas the complexity of scaling a operating business empire seems really difficult, really expensive, a lot of headcount. And when you compare that to like Fong Lee, CJ, Saylor, and CFO Andrew Kang, like it's like four guys in a room that are operating at massive scale, and there's no reason that they even need to bring in another person to hit the next 100 billion of value. So it's as somebody who's operated businesses, it's a little intimidating to me, their model. And I guess the last thing I'll say to throw it over to you guys is what Raphael's shareholder letter says, it sounds almost exactly like what Jack Mallers' vision was, right? So I was kind of expecting Rafa to maybe talk about issuing a preferred or something so that we see this line in the sand that was maybe a bridge too far to cross for Mallers. I'm very curious now, seeing this shareholder letter, what the actual disagreement was in terms of the vision for the company, because it sounds to be the same company as far as I can see.
Yeah, that's a big question I have, right? So Jack Mallers did the the podcast circuit in the last couple of weeks when he was out after he's been out as 21 CEO. And yeah, there's not a lot different, I don't think, other than they're not acquiring Strike and folding Jack's company Strike, which I'm sure our viewers know is a Bitcoin exchange essentially, and payments app. But yeah, I mean, it can't be that they were just misaligned on a price or how to fold Strike into the company. But on the podcast circuit, I don't think Jack really dug into what exactly the disagreements were. He's like, I can answer anything now. I'll talk about anything. And I kind of came away listening to some of the chats he had about okay, what was the hang up, and yeah, hard to say. It will be interesting to see if there was a disagreement on how much they should lean into the capital markets side of things. Um, with their latest earnings, it does look like 37% of 21's balance sheet is encumbered. Their Bitcoin is basically pledged as collateral on the convertible notes, if I have that right. So that probably allowed them to get a little bit better terms. They're only paying 100 bips, I believe, on the convertible notes. They're quite a bit out of the money. They're, over 150% out of the money from the conversion price. So, if Bitcoin's price doesn't bounce with it, that's going to be hanging over the balance sheet for a little while. But they're not due until 2030. So probably no issues there if Bitcoin does what we think it does. But yeah, I don't know what the disagreement might be, and yeah, just thinking about the question I posed is, this company is going to have to do hundreds of millions of dollars in revenues in short order to really differentiate itself from this Bitcoin balance sheet. Maybe even billions as it scales. I don't know. Maybe they're going to deploy the Bitcoin. Maybe they're going to be more willing to sell it to fund acquisitions or operations. But given that they do want to be known as the Bitcoin company and changing the game with Bitcoin, I know they have huge aspirations, and the backing from Tether seems to indicate that. Yeah, I do just wonder what the strategy is, when we'll find out the key details. I think Electron's going to be, once they can acquire Electron and merge that into the company, seeing what those revenues are like. Maybe it's already extremely profitable, and that'll answer that question. Maybe that will allow them to get a little more courageous with what they're acquiring. But your point also holds, Chase, about Berkshire's not out there really operating these businesses. Sometimes they can't come in and take an activist position and kind of streamline these businesses. And I don't know that there's a lot of Bitcoin native companies out there that need someone to come in and just prune prune the problems, prune excess expenses, unless they really feel like they have an advantage with miners, and can acquire maybe some of these mining businesses. But curious of Eve, Parker, what you guys think. What's the opportunity here for 21? And I mean, I guess it's kind of just wait and see as well.
Yeah, I think trying to build a Bitcoin or Bitcoin businesses makes no sense as a company that's not like they don't have some edge. Um, I don't think there's been, to my knowledge, any Bitcoin only businesses that have outperformed Bitcoin. I think there's maybe been a few like crypto businesses that have outperformed in the short term. You might look at like a Hyperliquid or like Pump, but like those are, a couple years, right? Nothing like that's outperformed over 10 years or something. So, maybe one of the few exceptions, maybe Binance outperformed, but I'd say probably the one major exception, the crypto business that has outperformed Bitcoin for a decade is Tether. And so I think if they're going to do something, it needs to be with Tether. And why not? They have the connection there. So it could actually be pretty interesting where they simply take a giant stake in Tether. And maybe it's essentially sell a big block of Bitcoin, maybe half their Bitcoin stack, and buy a bunch of equity in Tether. And this is like a pseudo IPO moment for Tether. The company couldn't hold more than 40% of their balance sheet in Tether, but you can hold maybe it's 30% plus Bitcoin, and Bitcoin's a commodity. And so then if you want public markets exposure, Tether, the only way to get it is through 21. And we see the multiples that Circle has gotten. And so I think this could be an interesting way to be like a kind of Bitcoin operating business. And then there's a lot of like kind of cross pollination that could go on where, for example, 21 could issue a giant preferred. And the main problem with preferreds is getting that kind of liquidity flywheel going. And so you could have Tether essentially step in and provide, a big IPO anchor order, but then also kind of market make it. So you could have Tether step in and be like, all right, whenever it drops to 95, we will be the buyers of last resort. We have hundreds of billions of cash on the balance sheet. Tether would be the buyer of last resort. And then once it's back at 100, then Tether could kind of unwind its position. And so Tether could kind of step in and basically force the 21 pref to be, probably the second best, most liquid preferred instrument. And all of the value of that is accreting back to 21, which they're a big owner in. And so there's kind of this, loop-de-loop situation, but they have the balance sheet to make it happen. And, I think it's in their best interest to have a strong, successful public company in the US market. And this is a way for them to kind of go public without having to, actually go public and open up the books and do the IPO process and do quarterly filings and everything. So that would be my recommendation for 21 is acquire a stake in Tether, become like public Tether, and then do a pref and let Tether basically bootstrap the liquidity there to overtake Strive as the kind of second place. And they already got a lot more Bitcoin, so there's no reason they can't do it. I think it's a pretty straightforward path, honestly. So I don't know. Who knows? Maybe that's why they got rid of Jack, because he didn't want to do that. And they actually just wanted to make 21 their puppet. And he wouldn't be a puppet. Maybe that's the issue. I don't know. But those are my thoughts.
No, good thoughts. I think, yeah, that's interesting. I'll have to think about that. Like I I tossed around the idea. It's like, oh, is this a way that Tether could onshore go public? And that seems not in the cards. Like they're not going to like reverse merge into this company, and Tether is pretty happy operating offshore because just because of the size of the stablecoin
Well,
market.
and to be clear, they could just buy
A chunk.
a little slice of
Yeah.
Tether. You know, you think about like the Yahoo example, when all the value of Yahoo was in Alibaba stock once Alibaba went public. But prior to that, a lot of the value of Yahoo was like this eventual IPO. And so you just have a small slice of Tether owned by this public company. And if you want exposure to Tether, the only way to get it is through this like quasi tethered DAT thing. And Tether never has to open up their books. They never have to file financial statements. They get all or a lot of the benefits of an IPO without actually IPOing. And then if they need to raise more capital, they can just sell more equity into the Tether DAT, right, into 21. And as long as 21 keeps it below that 40% threshold, they are an operating company. They're not a 40 Act fund. And so they can just keep buying equity from Tether, and Tether can just keep selling it in. And then as the Bitcoin grows and they can get that flywheel going, that reduces their exposure to Tether so then they can take on more. And so it's kind of allows Tether to have their cake and eat it too, because they never have to open up the books. They never have to give away control, none of the nasty things that go along with an IPO.
Right. Yeah. No, I think that makes some sense. Yeah, it's yeah, I guess, yeah, because I always thought the regulatory aspect, of Tether not wanting to operate in the U.S. But yeah, if did you say that Alibaba did this with Yahoo? Can you like just like catch me up to speed with what they did there?
I'm no expert here, so I'm going to butcher it. But
Okay.
essentially, Yahoo had a giant stake in Alibaba, and then when Alibaba IPO'd, if you wanted exposure, through U.S. markets to Alibaba, you just like bought Yahoo because it was like, again, I'm butchering this, but it was like 80% of the value of Yahoo was
Sure.
Alibaba stock
Yep.
all of a sudden. And so Yahoo was just this Alibaba DApp for a little while until they were able to divest it and whatever. And so Alibaba had no filing requirements in the US. They weren't operating in the US like, any company that could just go to Tether and be like, hey, we want to buy a block of your equity. And if Tether's willing to sell it to them, like, great, like they can just do it. There's no restrictions. This isn't Tether starting to operate in the U.S. Although we know Tether wants to operate in the U.S. Right? They've launched USAT, but even if they didn't want to operate in the U.S. at all, they could still do this. And U.S. investors look at Tether and they're like, "Whoa, this is like it's the most profitable business per employee and one of the most profitable businesses on the planet." Investors would like access to that, and candidly, anyone could do this. Any of the Bitcoin DApps or any company could just go out, and if Tether's willing to sell them some equity, they could like accomplish this playbook. But I think Tether is very selective on who they sell equity to.
Yeah.
And so, probably want some, backdoor control or direct control. And so 21 is kind of the perfect vehicle for that.
Yeah. No, it makes sense. I'm surprised like more global companies that are really profitable, especially maybe in the Chinese market, don't you know, attempt this kind of strategy to access U.S. capital markets. Maybe it's happening more than I'm even familiar with. I'm very
Yeah, a
buried in my
bunch
niche
of
here.
Chinese companies list on the Nasdaq, and you got ADRs from Hong Kong. So like it's happening quite a bit, and they're just willing to go through the process to open up their books and to actually do the IPO process. Tether could totally do this. They just, because they're not wanting to open up the books, that's fine. They kind of have to do this like a little more backdoor route. It's more expensive. It's a little more convoluted, but it's certainly not.
Yeah, I mean that'll be something to monitor for sure. And it would make sense that it hasn't been announced or even really teased. Like even if there's like indications that this might be what they're doing, with Tether's, widespread control. Obviously, if they made any sort of overtures that they were going to move to that, the share price would certainly rocket because I think you know, lots of people would be really interested in getting a piece of some exposure to Tether. But like with any of these companies that before they merge, we saw this last year with Bitcoin Treasury companies like price action. It's really hard to even value these companies even as public equities until the dust settles. So, full caveats here. If you're thinking about investing in 21, it's like we don't know what the full dilution picture is going to look like even after the Electron deal and whatnot. But I'm really excited to hear more. And I think we're going to get some more public statements from Raphael, certainly in the coming weeks and months. So will be really interesting to monitor. Um, we've got a Sandeep Stars in the comments saying the only Parker is in the house. Shout out to Parker. I think you need to update your X handle. But yeah. Also, yeah, people are agreeing with your kind of thesis here on 21 and Tether. Eve, Chase, I'll throw it over to you guys. What do you think about um, you know 21 taking a slice of Tether on the balance sheet? Is that something you expect to happen? And what does that mean for um, I guess Bitcoin on the balance sheet moving forward? Does it affect how we think about a Bitcoin balance sheet? Does this kind of you know make the case that an operating company or a company that has financial exposure to someone like Tether, who is, reportedly pound for pound one of the most profitable businesses in the world, right? Based on employee headcount, it's like absurd their profit margins. What's your guys' feelings on that?
Yeah, well, I don't have too many opinions, but I think Parker is onto something definitely, and I think it kind of makes sense. What is really so for 21 since the beginning, one thing that I've always felt was it's quite complex. They don't tell you the things like a strategy and a strive. Everything is so transparent. That's why I like this company so much. Metaplanet fairly as well. And for 21 since the beginning, it's always been very complex, even to read how they set up the first kind of they had the way that the investors had invested in 21. With back in the day it was SoftBank, and then there was obviously Mallers that was involved, but it was Tether and I don't know what, and then there was Cantor as well, and it was already complex. And now with the changes now and this the the shareholder letter also feels a bit I don't want to say cryptic, but yeah, you need to a bit decipher what they're talking about, what they mean. It's not very clear. So for me, it's yeah, anything can be in the cards. I think Parker is definitely onto something with Tether, because that's what kind of makes most sense when you look at the bigger picture. But is it really? I don't know. Another thing that also I want to point out is obviously they mention, and as I think Chase and Parker already alluded a bit, is you have these different operating businesses, but what's the synergy behind it, right? You need to have some synergies that really make sense if you want to really have a profitable business. And then again, going back to the hurdle rate of Bitcoin, right? If you want to really beat that, then the synergies must be strong. And to be honest, right now, how I look at things, I'm not so sure. I need to deep dive way much more into 21 to really have a better opinion. But these are some initial thoughts I have on that.
Yeah, I think Parker's pref idea makes a lot of sense, right? We've talked about a lot on this show and yesterday that, you know, the ceiling and the room for the demand for a pref, there's a lot of money that wants to access these, but jurisdictionally, it doesn't make sense to have 50, Bitcoin backed prefs tomorrow in the US market. But because Tether already has this big balance sheet, they can scale really quickly and steal potentially a meaningful portion of the dollars that would allocate to a pref. And I think it is interesting, if they get exposure to Tether and have Tether, providing capital to kind of keep it pegged, or maybe it's a pref that's a little bit different, maybe with some more volatility or something. I think it makes a lot of sense.
When if you think about like, okay, what is supporting Stretch right now? Why are people having more comfort? It's the USD reserve is growing, and they're doing buybacks to the tune of about 100 million a week, so about 20 million a day. Okay, well, Tether has, 180 billion of USD reserves. And, anyone that goes and looks at their balance sheet, it's not just all sitting in treasuries. They've got gold, they've got Bitcoin, they've got corporate loans, they've got a whole bunch of stuff in there. So, this is not like a circle thing. They're buying other stuff. So there's no reason that they couldn't allocate 12%, I mean, 5% of their balance sheet would be 9 billion. You could even allocate 2% of the balance sheet to buying prefs, buying their own pref essentially issued by 21. And then they just say, yeah, we're going to always have cash set aside, in treasuries or whatever, and we'll step in at 90 or 95 to set a floor on this thing. And they have a far larger balance sheet than Strategy, and very importantly, it's a countercyclical balance sheet. So yeah, sure, they lose a little bit of TVL when the bear market comes, but their balance sheet doesn't go down by 50, 75% like Strategies does in a bear market. And so um, Tether can really serve that role of effectively a central bank, liquidity provider of last resort. And um, they don't have to sell Bitcoin to do it. They don't come under stress. Like they just have this huge balance sheet. So I think it just makes so much sense for them to do. I guess the question is I know they're working on lots of other things, and they also make $1.5 billion a quarter. So maybe they're not in a hurry to do anything. I think that's probably the biggest problem. Candidly, is you're on top. Why stress and hurry or anything? But I think this would be the logical step. And if anyone was going to have the ability to flip strategy in terms of issuing a pref and having it be more liquid and widely adopted, I think Tether might be the only ones able to do it. They don't certainly have the marketing engine that strategy has by any means, but in terms of balance sheet, it's certainly far larger and more fortress-like.
Right. Definitely. There's obviously concerns, if they have to deploy some of that balance sheet, they have to manage investor confidence in Tether and the stability of the stable coin. I don't think they're anywhere close to jeopardizing that, nor would they be if it was, a few $100 million here and there, or $1 billion to potentially buy back shares of a pref. But thinking about scale and size, I just looked up the numbers. Circle raised, somewhere between $1 and $2 billion with their IPO. So that gives us in what Tether's 2 or 3 times bigger than Circle, the stablecoin market. So I mean, like that kind of tells you what kind of investor appetite there might be for this type of thing if Tether were to enter U.S. markets, right? We're talking billions of dollars of appetite, and probably more because they probably get a premium for being, the fastest horse in the stablecoin race.
Absolutely, yeah. And I think Circle has more employees than Tether. They have more compliance overhead. So on a profitability, um, from a profitability perspective, Tether is a much more attractive business. And so I think they could raise quite a bit more. And then, I guess the question then becomes, what do they do with all that cash? Do they need the cash? They're kind of swimming in cash. Where do they put it? But, they've been buying a lot of gold. They've been buying Bitcoin. They've been deploying into AI. If you're able to get cash, you might as well put it in some of these other businesses to further diversify the asset base. And at some point, they're starting to really what are they, the 7th or 8th largest holder or 5th largest holder of US treasuries? They start to, Paolo might need to have a private landing strip right next to the Federal Reserve or the Treasury Department to just fly in and have regular conversations. And so at some point, having a couple billion here and there to, buy a bank, Bank of America is on the edge of bankruptcy, and these guys step in and prop them up and inject themselves in the banking system, or step in and support a smaller country's central bank or whatever. They can start to really have an impact on the direction of human civilization. And so a couple extra billion floating around from an IPO type event, selling some shares in 21 could certainly be some dry powder to make something like that happen.
Yeah. Yeah, you raise a good point too about how many dollars worth of U.S. Treasuries that Tether holds. Every time someone brings that up, it's like Tether basically holds almost as many treasuries as Canada. So it's like it makes me think of Balaji's kind of network state. I'm venturing a little off the deep end here, but the network state kind of thesis that Balaji has, where maybe in a decentralized future, a lot of our political and hierarchy structure happens online, and entities like Tether, funding so much of U.S. government expenditures, s- kind of lets you see a glimpse into how that type of world could become a reality.
There,
Any more? Yeah,
yeah.
go ahead, Chase.
So there could be one other thing based on the shareholder letter from Raphael that maybe is the line in the sand that Mahler's was not willing to cross, which it discusses M&A activity. And you could argue that there's an opportunity in this bear market, and the shareholder letter kind of winks at this, that there are mispriced assets due to the bear market and that they are going to lean into M&A activity. Well, what if 21 went around and just acquired every little Bitcoin Treasury company that's trading below 1 MNAV? Now, that wouldn't be Jack Mallers' vision because most of those companies don't actually have operating businesses, right? They were just capital markets arbitrage opportunities in different jurisdictions following kind of Saylor's strategy out of the gate there. So that would explain the shareholder letter. That would explain the emphasis on M&A and calling out kind of a weakness in the price of certain assets in the space. And it would explain, the breaking point between Mahler's vision and perhaps more of a capital markets vision that, because I believe Rafa has always been very positive on strategies, models, and even the preferreds from what I've seen. So that could be what's cooking there is somebody is bound to come and just clean house and basically say, all of these are accretive in Bitcoin per share terms. If we can convince 10 of them to come with us, that'll convince the rest to come with us, right? uh, we've talked about this on the show, Tyler, where why would a Bitcoin treasury company that's trading below 1 mNAV sell? Well, they might sell if they thought the other 9 Bitcoin treasury companies that are also trading below 1 mNAV are going to be joining forces with it inside of 21 with Tether's backing and 40,000 or so Bitcoin on the balance sheet. Then they can start to see that maybe shifting their equity ownership in this Bitcoin treasury company that is not getting much attention from the media and capital markets into owning a sliver of this larger entity that maybe can become the number 2 spot to issue digital credit in the future. Maybe that becomes a trade that these Bitcoin treasury companies are looking at seriously and looking for an exit right now. So yeah, I think that that's more likely than the Tether angle, just because of kind of the point that a couple of us have made, which is like Tether is winning so hard right now. If they wanted to go public, they would deal with it. They don't really seem to want to go public. Why confuse their business model? It almost seems like they've created more distance between the team and the board, right? Like, weren't some of the Tether folks more involved, just like SoftBank was more involved and Mahler's was more involved? So, if anything, I feel, as somebody who knows nothing about the inside activity of the baseball going on here, that it's going to be Rafa's show, and that Rafa is clearly presenting a vision to the board that the board liked more than Mahler's vision. And maybe that vision was, hey, we can't go wrong by scooping up a bunch of these Bitcoin treasury companies at below 1 MNAV because it's accretive and it adds Bitcoin, which then allows us to add that to the 40,000 Bitcoin and issue digital credit. And if we do it now in a bear market, we can go get discounted Bitcoin.
Yeah, the one problem is I don't think a single DAT of any kind would ever sell below 1 because you can always just sell some of the asset, sell some BTC to buy back equity to get it back to 1. So the only M&A deal that's ever been done in that world was Strive buying Saylor, and Strive paid a hefty premium for Saylor. Now, what they did is they did it with equity that was trading at an even greater premium. So in reality, they did buy Saylor at a discount, but Saylor was able to go to all their shareholders and be like, look, we are selling at a pretty hefty premium. I think it was a 30% premium to our Bitcoin holdings. So we can't just sell Bitcoin to buy equity to get it to that level. Anyone trading at a discount can. Now, you could make the argument that they should just pay a premium anyways, pay a 10% premium, because then these boards can't reject it. And sure, it's Bitcoin per share destructive in the short term, but if it gives them more scale to go do digital credit, then maybe it's like a lose the battle to win the war type situation. But having having seen the kind of the data inner workings, obviously coming from DFDV and being a co-founder there, these operators are just not interested in selling at anything below 1 because they always had that lever to get their equity back to 1. So just some thoughts there. But I do think a roll-up makes sense. I mean, there's so many of these just floating around. It's just somebody needs to bite the bullet and be willing to pay a premium to their Bitcoin per share.
I actually agree with you, Parker, but the one thing I would say is, like, as logical as that is, the market reacts differently. And I'm not sure if these little Bitcoin treasury companies that have been getting beaten up, if they announce a sell of Bitcoin, that investors are going to be excited, that they're, trying to do it to get back to an MNAV of 1. I think they'll look at it as weakness and perhaps an unraveling. So I agree. Like, it's the same thing as strategy, selling 32 Bitcoin to inoculate the market. It should be a nothing. It should be a net positive. But the market gets freaked out, especially in the depths of a bear market. So yeah, I don't know. You could be right. I like Tyler and I, we've talked about it on this show. Like, it's hard to see why a Bitcoin treasury company trading below one MNAV would ever sell for less than one MNAV. But maybe if they really believed in the future prospect to catch up against that multiple.
Yeah. Unfortunately, boys, I got to drop to another call, but it was great to chat.
Yeah, absolutely. Thanks for dropping in, Parker. Yeah, we'll wrap it up. I'm just looking at the Bitcoin Treasuries 100 list, and maybe I'll have to do a deeper dive, and this could be like maybe a long form article, but thinking about the U.S. companies that are there, they've got to want to, to make it worth it. If you're buying out a company, there's a lot of legal expense that goes into that. So you're going to want to, the targets that they acquire are going to be much smaller, obviously, than 21 in scale, but it has to have, Semler had 5,000 Bitcoin when they, were acquired or merged with Strive. That narrows it down to, 5,000 is like a lower bound. There's 20 companies out there, that have that. So it's got to be, in looking at them, some of them are miners, some of them kind of have a clear, business that you can kind of see where they're headed. So yeah, it would take a special case. Nakamoto's one that seems obvious to everyone that they would kind of want to get. They're trading at just like a large discount to their Bitcoin, but the Nakamoto story is a little complicated, certainly with their business. And their media businesses and the conferences. So that one's a little trickier. So yeah, it'll be interesting to monitor. Thanks for kind of running through this with us, guys, and hopefully in the coming weeks and months we have like some more concrete things to work with, and we'll do less projecting on what's going to happen. But before we wrap here, if we'll start with you, Eve, let everyone know where they can follow your work and find you online.
Yeah, you can follow me on X at GraphEve. I'm quite active, although lately I'm not posting too much, but I'm always checking. And also at the One Chair podcast at One Chair Pod on X and YouTube.
Yeah. And Yeah, we definitely did way more speculating this episode than we normally do. So for audiences that only tuned in this time, this is not the normal. We're sticking to like real metrics and defined outcomes, but today we really wanted to let it go. So anyway, Chase Palmieri, you can find me at Chase Palmieri on Twitter. Also host of RE Bitcoin on YouTube and COO at Savannah, where you can take your idle home equity and turn it into Bitcoin buying power. Savannah.io. Thanks, Tyler.
Great stuff, and thanks, boys. Thanks for everyone who watched on YouTube and on X. Make sure you hit like and subscribe. Leave a comment. Let us know what you want us to talk about in the weeks ahead. There'll be lots of strategy news, Strive news every week, and we're gonna bring it all to you, break it down, give you the analysis and our takes. But we'll see you next week, Tuesday at noon Eastern.